evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Monday, the 5th of January, 2026, and the time's about 6:55 p.m. Central Time. And what a day it was. We saw the reactions to the U.S. capturing Venezuelan President Maduro and his wife, bringing them to the U.S., getting them into a court where they, of course, pled not guilty. And now the long trial time begins. There'll be a lot of whatever in the United Nations, but with the U.S. having veto power, we can just listen there and then say no. And that'll be whatever it comes down to. As for people thinking that we're going to take over the oil and suddenly American oil companies are going to rush into Venezuela, not me. I'm not in that camp. You have to first prove that you can get a government in that camp that will protect American interests for the billions that would have to be invested. You can see that that has not been the case. Am I right? There's one oil company in the U.S. that is allowed to do business, and that's it. The others have been locked out of things that they invested millions upon millions and billions in cases in that was taken from them. As the government there said, no, we don't want America here. We're just going to take over these facilities. And they did. We need their oil. That is the grade that America refineries use to do. What we produce in America, we primarily export. I hope you realize that. Our light grade, we like the heavier grade for our refineries. America doesn't build new refineries. I think you realize that. If anything, we've been shutting them down as the state of California, what's going on. The other part was we had a number of people not believe in the Santa Claus rally. I, of course, would rather be wrong than right because I believe in Santa Claus. And as a kid, how could you not believe in Santa Claus? I still remember sitting on Santa's lap at the department stores. So whatever the case may be, it happened. It's very geared to the Dow Jones. None of the other indices went up for new highs. They all had a neat rally off of it. But the question is, will the rally have any legs to it? And that's what you've got to ask yourself now. A lot of money's come back into the market. Think about this. Traders go away for the Christmas holiday. Some take off and don't come back until after New Year's. They come back. They want to get new positions on. Here's the opportunity off of the situation that just happened. And they make their moves in the marketplace. I get that. And I think you should get that. And you understand that today's one of those. So the first week, okay, you make your trades. If you have a good trade, great. If you don't, have a tight stop. And don't let how the first trades of the year go, positive or negative, influence your thinking. In terms of news, we are going to get the Red Book retail sales for the week ending January 3rd at 7:55. S&P Global Group's going to release their final December service sector PMI at 8:45. The prelim figure was 52.9. And in Fed Talk, Fed President Barkin's going to deliver remarks at the Raleigh Economic Forecast event on Tuesday. No time has so far been announced. But I wish I knew what time he was speaking. Before I get into the charts, I want to remind one and all that this is typically the most I offer off on my research or charting courses for the year. So you're going to get the best amount right now if you want to take advantage. This ends this week. 40% off any of the research packages, any of them that we have on the spiders, the stock markets, the ETFs, the futures markets. 40% off any of the courses. And remember, the courses start when you want to start them. So 1 year's 40% off. 3 months, 40 off. Give yourself at least 3 months to a year. I think you'll see that if you follow what I do, my goal is to get you on the right side of markets as best as I can. I wish I could do this year as well as I did last year. It's that simple. It was a nice year. And yes, I didn't catch this last leg of the metals, but we certainly caught an in-between leg that made a lot of people whole, and that's the good thing. The other part is learn money management, learn trading skills. All right. By the way, all you need to do to get to the where it's at, you move your cursor up here, or if you're on watching me on YouTube over here, or just go to iraepstein.com and everything's there. You don't need a code. Whatever you buy, we've set the computers up and it will go back to the old prices. I'm telling you, at the end of the week. So you're running out of time there. Let's go to the chart action and talk what happened. First off, the market is staying and has stayed over the 18 day moving. This is actually a weekly chart, so I should have written 18 week. I'm just seeing that for the first time. So I'm going to do that so I don't screw it up again. There we go. This is your 18-week moving average of closes. And the market has been over it ever since back here. And that was May 9th, 2025, and it hasn't looked back. It has not closed once under that moving average. That's important. When I look at the daily bar chart, you can see the market has not taken out the most recent high, which was 70.15. We've recently come back up and got to 69.95 and so on. So you've had a nice run. That's number one. Number two, you can see that the market, if you take a look for the Santa rally, the market came back up. Now, it did make a high, and I think you'd agree with me, on December 26th. But this is the S&P. The Yale Hirsch theory is the Dow Jones. That's what he based it on. Here, you came up, but I don't call that the rally for Santa. And you can see you're staying over the 18-day average, so the bias is up. I don't see an uptrend. I see a higher high, lower low model. I see a market that hasn't been able to get back to the Bollinger Band since this period of time right here, but it's had an easier time of breaking down. So the market's showing a propensity to actually drop a bit harder than it rallies. That's all that it says. The bias is still up, and you are getting into overbought territory. Anytime you have these numbers over 70, either one of them, they're overbought. Where the market saw more action was in the NASDAQ, but it too didn't really move up. If you look at what the market did, you peaked out on December 26th, and you didn't go back up and make another high for that. Where you did it was where Yale Hirsch's theory came in. So, broken clocks, well, they get right twice a day. In any case, the market came up. This was the old high. It's not about necessarily a new high. It's what's the market going to do on the last 5 trading days of the year and the first 2 trading days of the new year. And I don't think you could disagree. You went up and made that high, and now the market hit the Bollinger Band, and I think the smart money said, goodbye, I've got my money. In the Russell, just like in the other 3 indices, not the Dow, you really didn't come alive very much here. And you didn't make new highs for that whole period, but you didn't go down either. The DAX took off with everything, went up to the Bollinger Band today. It's been with an embedded reading, acted very strong. In the 10-year notes, you have a pattern on the chart where the market got up just back here to the 100-day average and made a run for the Bollinger Band right here, and it's just fallen back into no man's land. 2-year notes, staying stronger from a technical point of view, but really not running to the upside. The swing line is down in a downtrend. The bias is up as you're over the 18-week average, and momentum is pretty flat. When we come to the dollar index, if you've taken my course on Bollinger Bands, today was the day to come out. And I know people would just go, oh, come on. Well, Bollinger tops 98.58. You hit 98.60 today. Take a look at the top there. And now you're back at a 90, you're up tonight 10 points, 98.09. What I had said in the metal report is I said I think the pros are buying the market here with very tight stops right under this area to see if the market has any more up leg to it. What I don't like is now the market's got to prove it can get back over the 50-day average right here. In the eurocurrency, you fell down as the dollar got the bid off of the Venezuelan situation into the Bollinger Band today, into the 100-day average, which it actually did on Friday as well. And now it's trying to hold all 3 numbers. I don't know. It's not the place that I like in the markets. In the Japanese yen, we had an outside day to the upside. So did that change the trend? Not really. What it did here is you've got lower highs, lower lows. I would have been much more impressed had the market been able to get up and over this high. So I still think what the pros are looking for is, number one, to get away from being oversold with the reading under 30. Number two, maybe it can test the 18-day average. Number three, not to get up and over 64, 61. And if it breaks down, support 64.38. Bitcoin, as I said last week, I said, I think this market, and I was saying it over and over in the reports, I was saying to you, we keep hanging in here. We're not making a return to that low, but I don't have the market in an uptrend. It can't get itself going with the bias. It hasn't closed over that. Then what the market did on Friday for the first time is it closed over that number. So you had the trend up, the bias up, and at that point in time, if I take you right here, you were only a 45 reading in this market on the slow stochastics. Today, all that changed. You got up to the Bollinger Band. You got into overbought territory tonight. Take a look, you're at a 79 reading. I think the pros are taking the money off the table. But I think longer term, this market is making a statement that it looks to me like it's actually bottoming itself out, or has bottomed. In the crude oil market, as nice as the market rallied, why? You're not bringing more crude onto the market just yet. The embargo is still in place, okay. And I don't see U.S. companies going in to flood the market. Okay, so you'll say, is that bullish? Well, maybe that's why we rallied today. But longer term, you still got a glut. Every month, you have a glut of the oil. OPEC met, they didn't change their production numbers. You're overbought and you're not getting that far on the upside. Same in the WTI, and overbought. So I don't see anything that excites me right there. In the heating oil market, you can see you had an outside day up, so maybe we'll go back to the 18-day average. Why do I think that? Because you lost the bearish embedded reading. Do you see that? So with that being lost, why not go to the 18-day average and battle it out right there? That's what I think is going to happen now. But you're too oversold to want to be short the market. In the natural gas, just too much of it. I mentioned that in this morning's report, and you could see you're down to the lower Bollinger Band with new lows on the whole move. Yeah, new lows. So this market is not ready to go anywhere. So as I look at the whole thing, it was an interesting, fun day of trading. Not everything went the way that I thought it would. And we'll see what that means. Again, you're at the first, I consider today the first real trading day of the year. And that's because I think the traders are back in now, the markets, and in a trading mode again. I'm Ira. Hope you take advantage of the sale. Remember, all you need to do is move your cursor up through here, or it's over here, or iraepstein.com. Can't get easier. You take care.